Hey, what's up, guys? Today's Asia session trade was on MNQ and we took a short position. It was a much bigger trade than normal for our system. It was a 3.42R move, but I do want to get into the details as to why sometimes we do have farther targets and why I'm willing to go outside of our usual 2R system when price is telling us that there's a high probability of certain draw levels being taken. So I'm going to get into that right now. If you've seen our past videos, you already know it's always the same three-step process. Liquidity grab first, we need an established trend second, and then simply an entry model after the first two are checked off. But why did we have farther targets today? Why did we not just take a 2R like normal? So let's get into that right now. So if we go into the 4-hour chart, we had a significant level of liquidity taken. Let's see where we at, right there. So on the 27th of February, we left this 4-hour high, right? We tagged it today during New York, the end of New York. So if you look at the end of New York, it was actually pretty bearish. So I'm going to go into the 2-minute time frame. This was the sweep right here. Okay, and then since then, price, it wasn't very directional to the downside. I mean, obviously you look at this price and it's not a plus, but right after the grab, we had incredible sellers candles. Look at all the displacement, right? So that tells me there's a high chance that this is your typical sweep and reversal. Now, we didn't get confirmation of a bearish trend until Asia opened, right? So we had our sweep, we had a break of structure, right? Lower high, finally a lower low into Asia. Now technically this one, I guess. And then we had a continuation of the downside, right? So now, finally, price is becoming somewhat clear after Asia opened. Okay, there you go. Excuse me, I was thinking. So if you look at this, even though it's not A plus price action, you can't deny that the sellers are outpacing the buyers. So now we have liquidity grab, a significant level. Check. Step one is check. Step two, establish trend. You look at this market structure, lower highs, lower lows, multiple of them back to back. Step two is check. So now, three, we're simply looking for an entry model. For me, before we enter this short, I saw the LQ grab, I saw the short-term structure, and with our model, we already know short-term structure a lot of times turns into the longer-term trend. We're only seeking a 2R, but a lot of times we will get the opportunity for something like today, like a 3.4R. Why were we willing to take farther draw levels today? I'm going to show you why, okay? So we're going to go back to the 4-hour, or actually I'm going to go to the 1-hour. So if you remember, this is the 4-hour liquidity grab, right? And if you've studied a little bit of ICT and how the theory is of how price moves, then you know that after a sell side or a buy side grab, price is going to go and seek sell side, and then vice versa. After a sell side grab, price generally tends to look for buy side. So right now, the theory is that after this sweep, price should be pretty bearish if we get confirmation, which we did. As you can see, this is very bearish, and there is a chance for us to go hit previous day lows and potentially this LQ down here. Now, obviously those are not our targets, so we don't care about that right now. We're looking for the short-term move, a 2R. But because it seemed like this PDL, because it seems like it's a high probability draw area, then I was willing to stretch out my 2R and say, you know what? These are key levels too. We have an internal wick low on the 1-hour chart. We have the midpoint, which they call the consequent encroachment of a 1-hour gap. And if PDL is truly the draw level, which I have conviction in, then these are much higher probability levels because price is so close to them, right? So that is the reason for stretching out to a 3.43R instead of a 2R. Why? Because we had a higher time frame liquidity grab, a 4-hour one. We had a clear established trend. We executed our entry model, and price has a big there's a big chance that price will go down to PDL, so that's why I'm willing to stretch it out to these levels. I know I'm repetitive, guys, but I'm trying to make it as easy as possible to understand. If you have any questions, feel free to comment. I'm on Discord, X, and YouTube, and it's always the same three-step process. Liquidity grab for New York session. The liquidity grab is overnight levels, London and Asia. When we're trading Asia like today, the liquidity grab is either from New York or just a previous significant level, have it be 1 hour or 4 hour chart, on the 4 hour chart. But yeah, step 1, step 2, step 3, it's pretty much the same thing every day. And I hope that makes sense, you guys. Y'all have a good night. Peace out.